great day. I want to thank you so much for joining us and welcome you into America's Retirement Headquarters, home of the Retirement Guys formula and America's Medicare Associates, Nolan Baker and Scott Kirshner, and myself. My name is Chris Swan. Here's how you reach out, 419-794-3030. That's 419-794-3030. Online, americasretirementheadquarters.com. On today's show, a little advice from Warren Buffett, the Oracle of Omaha, on alternatives to bond funds. We're going to talk about what goes into the financial decision to retire early and how to budget for that bucket list you're looking forward to. All this and more. But first, got to check in with the guys. Nolan and Scott, glad to be with you as always. How we doing today?
Doing great. This is second time on radio today, so it's
two in
kind
a
of
row.
a radio-fulfilled day. Obviously, we've got the studio that we've been building out here in our headquarters in Maumee, and in the good old days, a little over 20 years now on the radio, and so for all those years, I'd go downtown and hang out down there. I got the opportunity to go downtown today, hang out with Fred Lefevre, and do a little morning drive time, so that was fun, too. It's good to be here, though.
Yeah, the times have changed, and now we can do the show, and you don't have to make that early 7 a.m. Appearance downtown with Fred. But when I did that, it was a lot of fun, and I'm sure you had a great time. And Fred's always a great guy to hang out with.
Always great to hang out with Fred, for sure. And it is kind of easier just to, I have to walk down the stairs from the second floor to the first floor to come into our studio. And,
a little bit of a shorter commute for sure. Kind of like when people were working from home. It's like, oh, I have to run up for my meeting. It's I just got to make it up the stairs and dodge the dogs. But glad to be with you. Sorry, I'm second rate compared to Fred for sure. But we're gonna do our best. We're gonna hold it down and go ahead and jump into the show here. Inflation is up. The Fed is getting aggressive with interest rate hikes, and the stock market showing more volatility. But analyst Eddie Ghabour tells Fox Business, well, he is looking for a silver lining.
Look, I've been very vocal about this. I'm very rarely this bearish, but this setup is one of the worst I've seen in my career. When you look at the overall dynamics here, I think right now our number one job needs to be protecting hard-earned capital and setting up for the next move to take advantage of some great opportunity.
So let's talk about what Mr. Ghabour said there. Can you guys give me some examples of how the retirement guys would protect capital and then look for opportunities?
Yeah, absolutely. And if you look at it, if you think about diversification, and diversification doesn't guarantee against risk, but it's been a strategy that's been around for a long time. And what it refers to is kind of taking and putting a mixture of your money between, say, stocks and bonds. And the concept of asset allocation says as you get older and closer to retirement time, you would historically put more money towards bonds. Well, if we look at this year specifically, 2022, what you've had is you've had an absolute complete meltdown both in the stock market but also in the bond market. So bonds, let's say that bonds has historically traded at a 1 standard deviation. And so that 1 standard deviation maybe means 4%. So it'd be fair to say that, if something with a 1 standard deviation as a bond could go up or down 4% in any given year. Bonds this year in most cases are trading at about a 3 standard deviation, meaning, they're seeing similar brunt and abuse that you've seen overall in the stock market. Of course, the markets are down depending upon what day you look at them, anywhere from 20 to 30%, and what index you're looking at. So I think a lot of investors are trying to figure out, okay, what's my move here? What do I do going forward? And some of the times, just going to the sidelines puts you in a situation where you have really no opportunity to get back. It's my opinion, equities will probably bounce back a little bit quicker than maybe the drawdown that you see in the bond market. And of course, in our past shows, we've been talking about the risk in bond funds with rising interest rates, which that's probably not going to go away anytime soon with the inflation numbers that are up. So for those of you that are listening, here's a couple different things to think about. Number one, utilizing circuit breakers. So circuit breakers are predetermined strategies that are designed to protect you and try to limit losses in a declining market. So some of our strategies that we have, like our Iron Retirement or our King's portfolio, we've had circuit breakers that have already gone off at our predetermined levels, utilizing strategies to protect. You can also apply the same type of concept of determining, when to put that money back in too. So you could use things like the moving average of the market, or you could make a determination, say, to buy when the market's down 30%. Again, using history as a guideline to help you make some decisions. And just because you buy it 30% down doesn't mean the market's not going to go down 35 or 40. But what you are knowing is that you're buying at a predetermined level. So again, it's like running the fire safety drill hazard ahead of time, so you know kind of what the game plan is versus waiting till the house is on fire. The other thing is fixed index annuity is a good example of a financial product. It's issued by an insurance company that will provide downside protection. So in most fixed index annuities, investors are protected against loss of principal, but it allows them to participate in gains if and when the market recovery happens. So again, if you're concerned about things and want to look at some protected capital strategies, those can provide some downside safety yet allow you to participate if and when and the market comes back. Liquid indexed life insurance is another option. It's kind of a weird concept. Most people don't think about that, but there are liquid index life insurance policies, again, provide protection from the downside of the market, but allow you to go up. And then we're also utilizing what are called protected equities. So protected equities are a strategy that allows an investor to reduce some of the downside risk if the market's going down, allows them to put some of those losses to another investor in exchange for a capped type return. So I guess the bottom line there is, market is a little bit of crazy. There are strategies. So if you're listening and you're not sure what to do, there are several strategies that you can take on what to do with your money and your portfolio. In fact, we're going to hold a special event coming up at our office just in a few days here. It is an event that we're doing to kind of talk about what's going on with the markets and steps that you can take in today's crazy markets. And so if anybody wants to register for that event, we have all the event details on our website, americasretirementheadquarters.com. That's June 7th. We've got a 12 o'clock session and a 6 o'clock session. We're talking specifically about turning panic into opportunity with that event.
So, Nolan, let me ask a question. So with the circuit breakers, who determines that? Does a client come in and sit down with you or someone on our advisory team and say, how do I determine when my circuit breaker is going to go off? Or is it across the board standard with all of the clients, or is it portfolio by portfolio?
Yeah, great question. So we have different strategies. So like our Iron Retirement series or the Dividend Kings, they use a little bit of a different methodology and a philosophy, but at the end of the day, it's our office that are executing those circuit breakers based upon our decisions. And at the end of the day, the buck stops with me as the owner of the company to make those decisions. But what we're doing is we're looking at things like the moving averages of the market. And history has shown that when the market goes below a certain point in the moving averages, it tends to say more danger to come. And that's when we would execute some of those circuit breakers. So like Iron Retirement, we review it every Friday, compare where the market is versus where the moving average is. And then we would move 1/3 out each and every week if it is below that moving average, just the same as we would move back in. So, interesting enough, we've been sending out communication to our clients, kind of keeping them up to date. And, I had a client yesterday had emailed that said, hey, let me know if I need to come in and do something. And I, responded back, buddy, no worry. We already took care of it. The circuit breakers are already executed. We already had the money and moved it out based upon the strategy. It was predetermined. We had a review earlier today with some clients, very similar question. They said, how's my account look? And I said, well, we had already taken 60% of the money and moved it out of the stock market. And then I also told them, I said, if and when the time is right, because this market is creating some incredible opportunities, we'll automatically move that back in when we determine and feel it's in the best interest of the client.
When you acquire a new client, they come in, and I'm sure that all of this is relate to them at the time of the opening in the account and that. But how can you not be a little fearful when you see the way the market is today? And I know that people, we get in our own ways a lot of times. Our minds work overtime, especially when, you have your retirement investments out there and you see the market fluctuating the way it is today. It's nice to know that you've got guys like yourself that have got these breakers put in place. It's pretty comforting to know.
Yeah, I'd say, anybody who's listening, if you are concerned, if you have a little bit of panic, that's the best time to talk to a financial advisor. Get somebody that's going to take, an outside view, be able to kind of help guide you through this type of environment. Again, turn panic into opportunity, and that's exactly what we want to have you do by listening to the show. So we appreciate all of our listeners for tuning in.
And if you have concerns, if you've been nervous for what has essentially been the past 6 months of volatility, kind of crept into the end of last year, and your advisor, your financial planner that you currently have hasn't really been addressing that head on, hasn't been talking to you about it, or has been absent altogether, I certainly encourage you to speak with the team. at America's Retirement Headquarters. Real easy to get in touch with. 419-794-3030 is a number. Start developing a strategy. Put those circuit breakers in place to have a proactive plan rather than a reactive plan. 419-794-3030, or go online to americasretirementheadquarters.com. Don't forget, over there on the website, you can find out information on how to attend the upcoming sessions that they have, Turning Panic into Opportunity, June 7th. There's a noon session and a 6 p.m. session. Get more information, again, on the website, americasretirementheadquarters.com. Let's be honest, people have different ideas about what their dream retirements might look like. So we had a chance to speak with some listeners to tell us what they dream about. And here's what they told us.
I would love to travel more.
Play golf.
Well, I can tell you, my husband, yes, travel. That's his number one thing.
So travel is obviously a very popular thing, especially in light of the past 2 years where that wasn't necessarily an option. What are some things that other clients have had on their bucket lists?
I would say, I've got some great experiences from clients, and one client in particular I know, when they retired, they actually sold their house, bought an RV, and traveled the U.S. for 2 years. They traveled around. So they stopped at a lot of different places. In fact, the husband had served in the military, and little did I know, but as a veteran, he was able to stay at military bases for a pretty economical rate, and also, had a lot of safety at the places, had a lot of great facilities to be able to use. We've seen people that have taken like the Viking River cruise, overseas. We've had clients that have taken people down and taken all of their family and grandkids down and spent time at Disney World, which is the most magical place on earth to spend time if you want to have some fun. And there's so many bucket list items. I don't know. How about you, Scott?
Well, travel, as you heard, and most people like to want to travel because they haven't been able to do that. And then you heard golf. I travel and golf. That would be definitely for one. I did a lot of cruises. I've probably cruised 10, 15 times. I would definitely like to get back into the cruising. Spend a lot of time with the family, too.
Yeah, I think, one of the key things to take away as a listener is, I think it's important each and every year you take at least a week and figure out what is your bucket list item that you want to check off this year, and do it, like you said, with your family, with your friends, with those that you love and care about. Life is short, as we all know, and so doing one of those bucket list items. So, Chris, I'll throw it back to you. Do you have, if you look back, what's one of your big bucket list items that you've checked off the list that you can think of?
There was, not to get too deep in the weeds here, but my wife and I, or our son, we had some medical problems early on with his life. And, he was born the day after Christmas. His first birthday we spent in the hospital. And jokingly, I told her, I said, I don't want to spend a holiday season in the hospital. I'd love to go to Disney World. And can't we just spend next Christmas at Disney? And, we actually got a chance to do it. We did some planning. We saved some money and went over there. It was more for us than him because he was 2 at the time. He really didn't get to appreciate it, but watching his eyes light up when he saw Mickey for the first time, that's something that he may not remember, but I'm going to keep with me forever. And we've been back since then, and he's certainly gotten to appreciate it more. But that is something that again, we would like to go back because we went in March of 2020, like the week before everything shut down. So it was a very very staggered trip, but hopefully we'll get to go back soon. But that's one of them that my wife is a big Disney fan, so for her, it is constantly, it's a revolving bucket list, I guess. Always wants to go back, always planning the next trip as soon as we get back.
I remember one time I went around Christmas time, and we had drove all night from Toledo, Ohio, down to Disney World. And, we were going through Atlanta at 4 a.m. just to get down there. And so we show up at Disney World, because I've always watched the Christmas Day parade, right, at Disney?
Oh, yeah.
Do you know it's not on Christmas Day?
Yes.
They record it like a couple of weeks earlier. So I show up to Disney after driving, 17 hours or whatever it was. And not only did they not have the parade, because it happened a couple of weeks ago, they also wouldn't let me in because they were at capacity.
Oops.
So it wasn't until the next day that we got into Disney. But you're right. What a great experience. And I think half of the world was at Disney even that next day. I remember pushing the kids around in a stroller, and it was just magical.
So you didn't go Clark Griswold on them, did you? And punch the moose?
So all I wanted to do is I wanted to see a parade, right? So I'm finally going to go see the parade, and I couldn't find a place to sit down because everybody had all of the sidewalk taken. So here I've got my kids in the stroller. the rest of the family decided to go ride the rides because that was the only time you could ride the rides because everybody's watching the parade. And so I get out in the street with the stroller to try to go down a couple feet and find somewhere to sit. And here's the parade people coming, and they're like swishing me along because they wanted me to get out of the way because the parade field's going. And by the time I found a place to sit, I was across the bridge on the other side of Disney. And as soon as the parade was over, it was just, hundreds of thousands of people. It took me forever just to find my family and get back. It was pretty interesting. But those are where you make those memories. So again, I think, takeaway is everybody should do some bucket list items. Summer's here. We've got the kickoff for Memorial Day weekend. Hopefully you're getting the grill fired up, getting the boat out, doing some things with your family, but want to do some bucket list items. And then I guess, before we move on, anything that you have done that's maybe your favorite bucket list, Scott?
Well, the one thing, there's a movie out called Bucket List with Morgan Freeman in it, and I think Jack Nicholson's in it. But, one piece of advice I guess I would give is don't wait until you're at an age where you can't necessarily do some of the things on your bucket list, or maybe even in poor health. It's like, oh my gosh, I've always wanted to do this, and I may not have all that much time left, and I want to do some of my things on my bucket list, and how much are you really going to enjoy them? One of the things I would love to do, I know this makes no sense whatsoever. Why would anybody want to jump out of a perfectly good operating airplane?
Not me. No.
I would like to do that, but that might not end well, but that's something. That's a bucket list thing for me, and someday I'm going to have to try that, I guess.
Yeah, I said that's got to be on my bucket list too. So I'll put that one down.
There you go.
And you and I can jump out sometime.
There you go.
Yeah, we'll set it up. Let's make it happen.
All right.
You guys can tell me all about it after the fact. I'm not attending. Regardless of what your plans are, what your bucket list, if it is travel, if it is play golf, if it is travel and play golf. I've heard people say, they want to play golf in all 50 states or go to every baseball park in America. Whatever it is, yeah. You seem to have a plan for it, whether it is, figuring out and crossing off which park you're going to go to first, but also how you can pay for it. And so if you know what you want to do, that's not something that America's Retirement Headquarters is going to tell you, oh, this is what you want to do in retirement. What they are going to do is say, this is how we make that, feasible, make that possible. But it all starts with that phone call, 419-794-3030, or online at americasretirementheadquarters.com. One of the 5 richest people in the world, he loves his stocks. Berkshire Hathaway CEO Warren Buffett, he hates the word bonds. He tells Barron's Magazine his preferred portfolio is actually 100% equities. Now, we can't all be like the Oracle of Omaha who has billions. If the market takes a downturn, he's going to be okay. He doesn't have to worry about things like Social Security either. But I'm sure you'll say his approach is extremely risky when it comes to people who aren't billionaires, aren't one of the first or the 5 richest people. How do you go about balancing assets in a portfolio, and does it depend from client to client?
Well, it definitely does depend on objectives. So obviously, if he has substantial assets and he can afford to ride that volatility, he can, take some of those roller coaster rides. At the same time, somebody who doesn't have a lot of money, and if they park too much in low earning interest accounts, they're losing purchasing power with inflation. So you've got to get it right. But, for those of you that are wondering, Berkshire's insurance asset allocation is made up of roughly 75% stocks, 21% cash, and 4% bonds. So, that's an interesting alternative to the standard 60-40 mix of stocks and bonds and what's called the barbell strategy of higher risk stocks and lower risk cash. And if we look at it, Berkshire has little to no municipal bonds, unlike most insurers. Berkshire does like treasury bills, which, have some of the ultra-safe government short-term obligations representing a bulk of its cash. And, if we look at it, though, Buffett's approach has paid huge dividends for Berkshire, given the stock market, the rally in the past, and, what he's done over his lifetime. So I think we can learn a lot from Warren Buffett. And I think there's a lot to be said on why he's so down and out about bonds. So again, as I talked about in the first segment, bonds have been beat up just like stocks have this year. Bonds face continued threats of rising interest rates for quite a long time to come, and it's not going to put you in a position that gives you a whole lot of opportunity. So what you want to do is you want to start to consider some alternatives to bonds. And in Warren Buffett's example, what he did is he used cash as an alternative to provide some of that downside risk management. But the ways that you can help eliminate some of the interest rate risk in bond funds. So those of you look at your portfolio. If you own, mutual funds, variable annuities, you own target date retirement accounts, what you want to watch for is the bond funds in the portfolio. Some of the ways that you can eliminate risk but still be able to manage your risk correctly for what's your desired level of risk is, one, you could purchase individual bonds. If you purchase an individual bond, as long as that corporation is in business, they agree to pay you a set interest rate, and then they also agree to pay you back that principal balance at the end of the term of that. So if you hold that bond to maturity, you can eliminate the interest rate risk that we see in the marketplace right now. Fixed annuities are also a great alternative. So what a fixed annuity is it pays a fixed rate of return for a set period of time. I just had a company I spoke to. It's an A-rated insurance company. They have a 3-year fixed rate at 4%. So that investor is going to get paid 4%. They don't have to worry about market fluctuations of prices going up and down. It's just 4% paid for 3 years, which is, actually quite a bit higher than most traditional fixed accounts right now. Mm-hmm. But there's cash in this example. CDs, as interest rates continue to go up, CDs become more and more attractive. Money market accounts. When you're also looking at some of the things that are offered from the government, he talked about treasuries, but again, I would reiterate the fact that a lot of investors need to be paying careful attention to the value in government savings I-bonds. So savings bonds are something that people haven't talked a lot about, but the government I-bond is the bond directly from the United States Treasury Department, and it's currently paying 9.62%, and that rate is good through October of 2022. So if you haven't looked into I-bonds, that could be another good option for you, where you own it directly at the Treasury Department, so it doesn't have the day-to-day price movements that you see in the stock and bond market.
So Nolan, with that in October, what happens then? What do I do in October?
So in October, what's going to happen is they're going to come out with the new inflation number, and that number could be higher than it is today. It could be the same, or it could be lower, and so it'll adjust. And, in my opinion, if you look at employment issues, you look at supply chain, you look at a lot of the things that are going on, inflation's probably going to be here for a while, so it's not like it's going to go away dramatically. But, again, if you look at the ins and outs of, how long you need to hold the I-bond, what, the value of getting the maximum principal of it. The Treasury Department has all of that information on their website. And, of course, we do this all the time and show people and educate them. So if you're not familiar with I-bonds, you can reach out to us and we'll take a look and explain them to you. And one other thing that I think people are not aware of, but it's a good alternative right now, is what is called a protected equity. So, again, a protected equity is a way that an investor can participate in a capped growth of the market. So if the market goes up, it allows you to make a 6, 7, 8, 10% return based upon, how the protected equity is structured. But if the market goes down, it allows that investor to put, 10 or 15 or up to 30% of the losses to another investor. So, at this point, you've got pretty substantial downside protection if you use one of those deep buffers as an alternative, but I'll be in a position to, ride the recovery. So, interesting from an asset allocation. I think we as investors probably all learn something from Warren Buffett. So when he talks, it's worth listening to.
I dare say he knows a thing or two when it comes to, making money. And again, I want to reiterate some of the things that he uses. He's able to take on a little bit more risk because he does have the buffer in there to withstand whatever the market may throw at him. You and I, as we get closer and closer to retirement, you want to minimize some of that downside risk. And in these strategies that Nolan just laid out there, they could work for you. You don't know until you sit down and you speak with them. Schedule a time, come in, talk to them. It's real easy. 419-794-3030 is the number. You can go online to americasretirementheadquarters.com. Once again, I want to remind you that upcoming event they have coming up on June 7th. There's a noon session and a 6 session. It's all 6 p.m. session, all about turning panic into opportunity, which is really shifting the mindset. You don't want to sell low and buy high. You want to be able to look at when the markets do take their downturns, and it is kind of an inevitable thing, being able to look at that and seeing it as an opportunity. And this is a conversation about how to do just that. Again, June 7th, there's a noon session, a 6 p.m. session. You don't have to attend both, but to find out more information, including how to go and reserve a space, go to americasretirementheadquarters.com. We appreciate you joining us here on America's Retirement Headquarters. Coming up after the break, we're going to commit to the 419 when we talk with Allison Armstrong, the first female chief of fire and rescue in Toledo, about some of the biggest dangers around the home and how to prepare for an unexpected emergency. That conversation coming up next.